Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update. We're going to work through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to interject all my financial opinions that I can as I go through this technical analysis. And if you guys need any help with anything, definitely check out finding-value.com. We've got a lot of really good setups there with the current market conditions that I think are playing out. And we can talk about it today, obviously. And you can use the word discount in the coupon code if you guys want a discount for the membership. We do have a 5 p.m. Mountain Standard Time on Sunday question and answer session, and we can go over a whole bunch of different things. So yeah, definitely join up to the community, and we'll dive right in here. So looking at the DXY, we've got a breakout to the upside. We've got a little, I like to call it a bloody nose, which generally moves higher. And this is where it gets a little bit interesting. Generally speaking, if we see a recession or a slowdown in the markets, we generally see interest rates go lower. So looking at this, generally when interest rates go lower, a lot of the times the dollar goes lower before, when those interest rates go down. And right now it looks like we got the dollar wanting to go higher. So that's what we've got there. We've got yields dropping today, down 3.8%. That's a big day today for a downside move. And when yields go lower, it prices things a little bit different. We are still above this support level. And if we get a move lower, that's the fear trade that we've seen the past 40 years. So this was the March 2020 is here, and you can see what yields did before it. They dove. If you look at the other crashes before those crashes, here's 2008. So in 2007, we were coming down in yields for the 08-09 crash. So yields generally, at least in this period here, dove down before crashes. And right now, we are sitting on top of support, not really diving down yet. We've just been moving sideways. And that's what makes it interesting. Are we going to get that dive that we normally see before a market crash? Are we going to get a market crash? Are these banks going to go through the system, these failures kind of swiftly, or are they going to drag everything down with it? I'm not exactly sure. I don't know if anyone has that answer, but right now, yields are holding up above support, actually quite strong. But today, definitely lower. Looking at the TYX 30-year yields came back, and we're back within the pattern. What I'm curious to see is, are we going to break back down and do a retest? Or are we going to launch higher and move on up? This difference here of whichever way we break makes a big difference in the market. If we see the TYX TNX curve go up and we see lower yields to do a retest, I think gold and silver are going to do incredibly well. If we break to the upside and continue higher and we invert the yield curve, then I think oil is going to be the driver of it. And I think a portfolio that's weighted between oil and gold could offset each other, especially if there's large asymmetric bets in that portfolio. So you can kind of hedge yourself on which direction this may go. And that's really what I'm trying to figure out is, where is this thing going to go? I want to see where it goes. The TYX TNX ratio much higher today, up 1.6%. And again, this ratio correlates very well with the performance of gold. Gold does well when the ratio goes up. These are gold outperforming areas. Generally, when they go downward, a lot of the times, if it's an inflationary environment and the yield curve inverts, that is where you get outperformance of oil, uranium, and a lot of these other ones. It doesn't mean that 100% of the time that uranium and oil do well. They can do well in this period as well, especially in this area down here. So we're coming back up, and a lot of the times when you come back up from a low, you get a problem somewhere in between this area here. This here is 2008, and then you get the pullback here, and then you get the move higher. This move higher is when everything kind of crashed. So we're moving on up. The likelihood or the statistical probabilities of a crash occurring under these market conditions is increased. I'll just put it that way. And that's generally when gold does very well. The US 2-year also dive bombing lower today, down 3.7%. Is this a head and shoulders top where we eventually work our way down to this support level? I think so. That's where I'm at. But we haven't broken any of these patterns yet. So, I mean, do we have one last bump higher before heading lower? That's all possible. And that's what we're looking for. We're looking for which direction this is going to break. If it goes lower, gold and silver. If it goes up a little bit more, I think we've got a little bit more in uranium, precious metals, and whatnot. And it doesn't mean we have to do this pattern either. It just looks like that pattern of a head and shoulders top. CRB index heading a little bit lower today, breaking through that support area. Could we go a lot lower? We very well could. Maybe oil is our leader in this type of move lower, and maybe we even head back down here if there's problems in the system. There very well could be. We have broken the uptrend line, and this CRB index here looks just like oil. We can look at that as we get there. So we could head lower, and that's going to be a tailwind for precious metals as money moves around the markets a little bit differently based off that TYX TNX ratio or the uninversion of the curve, the yield curve. CRB to S&P 500, we're still kind of just working our way sideways here. So they went down together for the most part. Gold looking fantastic, up 35 bucks basically, rounding upward. And I think this could go higher. I am still in the camp that gold's ready to rip it. We've got large up buying pressure days, not much selling pressure, and we have another large green army candlestick coming into the mix here. I think we're going higher, guys. We're sitting on top of a pattern. I mean, for Christ's sakes, you can't get a better setup than this. This is going. It's going for it. We've got silver also heading higher today, 1.68%. It's the same pattern. Large up candlesticks, not much selling pressure, big buying pressure today. It's ready to go. It looks good. Platinum up 11.5 bucks today. That's also following suit, doing its retest thing when it wants to down here. And then I think we're going to head on higher. And maybe it's the whole trio or the whole quadruple with palladium in there as well, moving to the upside. Now, I'm not as bullish on palladium, but I am bullish on platinum, gold, silver. XAU to gold ratio. Now, guys, you got to be paying attention to this, period. People are asking me, how does one make money fast? How does one do it? Well, I'm showing you right here. This XAU to gold ratio is cheap. It is cheap, okay? We're getting positive signals here in the gold and silver mining companies. The big green army, bullish engulfing, bullish piercing. I think we're going to potentially head higher here. And we're at a very, very low level down here. This is cheap as ball sack. I'll just say that, all right? We've got a downtrend line that we're trying to break here. If we break this, guys, this is where good things can happen. We have the alignment in the TYX TNX ratio forming up there. That's what this alignment is here. When this goes up, gold generally outperforms. So if I were to put gold under here and put a new pane down, if you notice, when this ratio goes up, gold goes up. When this ratio goes up, gold goes up. When this ratio is going to go up, gold goes up. And that ratio is the uninversion of the yield curve. So it's fear in the market, so to speak. So we come back down here to this ratio. What this is telling us is we've got an alignment here. The market conditions are aligning with this cheap ratio, and this cheap ratio is down here in no man's land. It means that there's an opportunity in the gold and silver mining companies. You look at GDX, it's up 4%, outperforming gold. it looks good. Bullish engulfing. Very good setup going on here for GDX. Now, we haven't broken. Now, I could probably pull this guy down a little bit here, kind of on the closing prices. But we're real close to a breakout here of this flag pattern. And if you look, we've got large buying pressure, small selling pressure. Large buying pressure, smaller selling pressure. That's the stair-step pattern that I look for a big move to the upside. So it looks fantastic, guys. GDXJ, I threw that in there too. We're down here really low. We have a long runway ahead of us if this thing decides to break. We can also throw a trend line on here. If you look at the trend line, what are we doing? Yeah, that's right. We're breaking out. We are breaking out of here. So I am getting uber duper super yellow fever bullish here. SILJ also moving higher. This is lagging behind. I like laggards because it gives me more time to buy and to shift money around. So I think silver or SILJ, the silver junior mining companies, also look very prime to move higher. They're just delayed behind it. We could see a big push way out of here if that XAU to gold ratio moves favorably for the sector and money rotates into gold and silver mining companies, which is what I think is going to happen. Crude oil getting hit on the nose today, heading back down today, 5.33%. That's that fear in the market. Fear in the market is not going to put a tailwind behind crude oil. It is going to be a headwind. And right now, that fear in the market is dragging down crude oil, and it's fear of the demand of crude oil. Does that mean that crude oil will automatically go lower? Financially, it might. We have to still look at the physical demand. Natural gas also heading lower, down 4.23%. And again, I think we're going to base out here for a little bit. So XOP, it didn't go down as much as oil itself, but it did have a big down day at 4.6%. We do have a little wick at the bottom. A lot of the times, what I like to see here, then let's back out a little bit here and take a look. This is what it's forming here, all right? And I don't know which direction it's necessarily going to go in the short term, all right? We've got a support level down here that we're squeezing up on, all right? We're squeezing into this pattern. We could, it's possible, get down to the $100 area level, or we go sideways here and then come and break to the upside. And right now, since we don't have a clear breakout on interest rates, they were putting in that kind of toppy pattern. The interest rates breaking down would make me think we're going to break lower in XOP. The interest rates where they're at makes me not know exactly where we're going to go. So if interest rates move on up, I think that XOP has a chance to rip it to the upside. I don't think we're going to see a blowout crash. I do think it's possible that XOP could revisit $100 here. That is still possible. It doesn't mean it has to happen. So we could very well reverse this, get large deficits in the market and roll on higher here and break on up. So again, I'm not doing anything with my positions. I'm just holding on to my oil and gas positions, waiting. But I did rebalance the portfolio a little while ago, and everybody knows on the website when I did that into more of the precious metals stuff, because it'll offset anything over here. OIH also down 6% today. The energy service companies. Again, we've been talking about this before. It's not a surprise that we're getting a pullback here. Large selling pressure and the buying pressure isn't as strong to the upside, so you usually get another selling pressure move. How far this goes down, we'll see. I think we got a little bit more maybe left in it. And we want to see the Green Army show up eventually. And that's when I'll get very bullish on energy again. We've got, and I'm still in bullish on a long term. I'm saying short term bullish. Sprott Physical Uranium Trust up 0.7% today. The Sprott Physical Uranium Trust still working in this gigantic triangle pattern. Let me back out here. There's the triangle pattern that we're working on. We've got a good setup here. with a big green candlestick and a bloody nose. That generally works its way higher if what I've seen in history plays out. If it breaks to the upside, perfect. It's going to be a nice setup. But today we were up 0.7%. We're still in that consolidation triangle. URNM down a little bit, but it's not that bad. Down 1.72%. Not too bad with the overall markets, what they were doing today. The overall markets were down quite a bit. So this is holding quite strong. It still looks like we could go in either direction. TAN heading back a little bit today for TAN. Could we get a little bit of a pullback here? It's possible with as much fear in the market. And maybe we pull back all the way to $54 or $50. Just like it did here, we'll have a pullback and then a launch. That launch will probably be moved by money printing or something like that in the system. COPX, getting a little bit of selling pressure here, but it's still holding itself together, a little hammer candlestick. It's not horrible. It doesn't look great. It's just kind of moving around here. Could someone say this is a shoulder head shoulder? There's no clear neckline though. And if anything, this looks more correlated to gold and silver because that's where they bottomed and started to go higher, just like gold and silver. We've got shortages in copper, or maybe not shortages. The market is tight, put it that way. So we'll see where this goes. Lithium also down a little bit today. We're still in this pattern that's forming, and we'll see where that goes. REMX down a little bit, still in the pattern, just like lit, and we'll see where this goes eventually. SPX down 1.16%, selling off a little bit, but it's still holding on. We got a little wick at the bottom. It wasn't a strong closing. It's not like people said, get me out of here, I don't care. So we'll see what happens tomorrow. If it comes back and bounces higher, maybe everything reverses. Maybe this is just a scary day today. Looking at the NASDAQ, also right up against that resistance line, down day, down 1%, but there's still a little wick at the bottom. There's still hope of this continuing to try to break through that resistance area. Emerging markets down 1%. Again, we're getting these little wicks at the bottom. That generally means that there's some buyers that came in towards the end of the day. Here's the daily candlesticks. So we came in, we came down, and then buyers came in, pushed it back up. We have a downtrend line broken, and we'll see which direction we're going to go. That's very, very short term. And maybe we can head back higher again. We'll see. Home builders still holding on. This is a bullish setup for a move higher. I am looking at it from large green candlesticks, bullish engulfing, a move higher. We had a little small pullback, big buying pressure, small selling pressure, still higher. That's a stair-stepping pattern that I'm used to seeing in the charts in the very short term. Looking at Moo. Moo still struggling down here. And we've broken to the downside here, and I still think we could go sideways, maybe a little bit lower before moving on up. But again, it depends what the overall markets do. Copper down 1.78%, 1.78, right on support. We're on that big long-term support area down here. So we're right on top of it. Looking at it from a long-term perspective, still looks bullish to move higher. Why? We're on support. We've got bigger buying pressure, smaller selling pressure. That move of the up move and then the small little leaking of sellers makes me think that we want to go higher. A lot of fear in the market can pull it down in the short term. Lumber moving sideways, looks like it wants to go higher to me because we've got the buying pressure breakout and the small selling pressure. We've got iron ore. Iron ore breaking back down. I think we're going to come to that area and break higher eventually. So just pulling back. Nickel sideways. Some people say, oh, there's a nickel glut. I don't know. If it's a glut, maybe we'll see it pull back. I'm not too bearish on the long term with it. Aluminum moving sideways still. Sideways, basing out. Baltic Dry Index sideways today, but I'm bullish on that moving higher. Looks fantastic for a move higher. Newcastle Coal, again, I like the way this is shaping up. I think it's going to move on higher or sideways at best. Or at worst, I mean. Sideways at worst, higher at best. Ethereum also moving sideways today, up 2-point-something%, but sideways down here, basing out. Same with Bitcoin. So I still think that looks good for a grind higher for both of those to the upside. So that's what we've got for today, guys. Gold, silver, platinum, they look fantastic. If the market conditions continue the way they are, and that's a big if, because we haven't broken anything yet. But if they continue to break down, gold and silver higher. If the markets turn, do a 180 and start to move on up, and we see oil hit it and all that, I suspect that interest rates are going to go back up. So remember, interest rates price these things, and fear in the market. So when fear in the market comes, you'll see interest rates dive, you'll see precious metals go up, you'll see a disparity between precious metals and copper. So if you were to look at the copper to gold ratio, it's falling. And generally when that falls, interest rates fall, generally speaking. But we haven't broken out of the major big picture views of interest rates yet. And that's that 2-year yield, putting in that nice kind of shoulder, head, shoulder. Haven't broken down yet. If we break back down, gold and silver, baby, gold and silver. If it stays up there, we could see the overall, I would say the overall markets, I think, will stay up too. We'll see. We'll see what happens. And we'll continue to go over it and monitor it. And that's what we've got for today. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. Love to have you in our community. And we'll catch you later. This is Finding Value.